Hi and welcome to the Market Alert for Wednesday the 26th of April 2023. So finally some moves. Downside convexivity is huge according to this headline. Well, we sort of had that low in the implied volatility last week and prices have started to move lower. US stocks declined and yields fell as First Republic Bank's deposits exodus reignited banking fears. And risk off as banks' fears reignite in wake of FRC deposits exodus. So it looks like the banking crisis is once again returning according to those headlines. Other economic news today, durable goods from the US and orders as well. So that's not out until 1:30 p.m. So the market's going to make its own direction today, given that there's only two economic news items. So let's kick off and have a look at the markets for yesterday, and we'll start off with the Dow. So in the Dow yesterday, we can see the markets broken the 5 and the 20 bar moving average, also traded down to the 78% retracement from here, projected down, the market finding a bit of support there overnight as well. So we can see there we had a bit of selling. Let's have a look at this in more detail. Yesterday morning we started off in the electronic market okay. We had a bit of a pullback there of 100 points, and the markets are struggling with the DP as well. Prices then retraced and then made their way back up to the close of the previous day, and then as soon as the Dow opened we traded lower. We traded back to 89% retracement, and then we dropped below the DP, all of the averages, and the market continued where it found support into the latter part of the trading session. Overnight the market is sideways, as can be seen there. It's trying to get back above the close, but so far has managed to stay above the low. It will need to do this if it is to move back to the upside there. Also get above the DP, which also sees resistance with the 50 EMA as well. And then above that you've got the 200 MA just above the BRN. With the next BRN you've got the R1 before you get anywhere near the high of yesterday. In the implied volatility, as you can see, this is starting to move up. Now we had the 12.29 the other day. Market now breaking out to the downside, as can be seen there, and the implied volatility starting to move up. And if we get more on the banking crisis coming through during today, that will add a bit more downside pressure to the market. In the German DAX yesterday, also red bar there, still in this sideways range, still trading at the 89. You can see where the markets come back to this point here, and found a bit of resistance again yesterday. On Monday, Tuesday down. The 5 bar moving average in yesterday's low is important. Let's see where that low is. It's just down here. That was put in last night. It's an overnight low there before midnight, and yesterday we came back down and then they managed to move the market up. A lot of resistance in this area with all of the averages. We eventually broke through, and then the Dow came on stream with the DP and the close adding pressure, and the market then moving to the downside. But before the close of the session the market was brought back. Been some volatility overnight, and at the moment the market above the BRN at let's just see what that number is, 15,800. Needs to hold, because if we take out the low, then as I say in the daily chart we're going to start moving to the downside. And I'll just draw in some fibs for you there, and you'll see that 78 ties in with the 20 bar moving average there. In the 5-minute chart yesterday, it was very choppy to begin with, as can be seen there, and eventually we broke out to the upside, and then we just meandered and continued to push up, as can be seen there, with the market coming off the low from Monday, using that as support in the afternoon as well. Prices then moving up before the Dow, and then following the Dow and taking out the low with an increase in volume there. So all of those areas you'll see the market increase in volume, and overnight, like I say, at the moment they're trying to bring the market back. You can see that here we went close to the low, and we've managed to get the market back above the BRN. So you can see what they're trying to do at the moment. They want to get this market back to the upside and keep it above the 15,800 level there. In the S&P 500, down yesterday, big bar to the downside, selling certainly there. We are oversold though, and we've got a bit of a bounce overnight. If you look at the 30-minute chart, you'll see that we have the low from yesterday, which is there. We're nowhere near it at the moment. We're busy trying to keep above the close and get back above the DP and the 50 EMA. But yesterday we traded down to the low. The low became a buying area. You can see that there, and we came off that, but the 20 bar moving average gave this market some grief as the price bars remained red. That means they were still closing below the 5 bar, and that's how it continued throughout the afternoon. So a bit of buying coming in the market at the moment, trying to hold it. In the FTSE 100, also a red bar. We've not had one for a few days. Last one was last week, but not with selling. This one's a bit different. This one's got a selling in it. We've got the 89% retracement where the market's come down, gone back up during Monday, and then selling off on Tuesday. But we need to take out yesterday's low in the FTSE 100, which hasn't been achieved yet. We've come down and had a look at it overnight, but now we're trying to move the market back to the upside. Yesterday, we shook out initially, and we see the buying coming in with divergence, and we'd already had a crossover, so the momentum was moving to the upside. That's how it continued throughout the morning, with a couple of bars coming back, but then the US came in and then moved the market lower. You'll also see here that we came back to 62% retracement here as the market then continued to the downside there. In the currencies, struggling still for the GBP JPY, came down again yesterday, finding support at the previous bar's low, which is Friday's, and attempting to move to the upside at the moment. There's your move on, or during yesterday. We traded up to the high couldn't hold, and then we took out the close, the DP, which became a bit of a support to begin with, resistance, and then the market succumbed to it, and we see the prices then moving down sharply all the way down to the BRN there of 165. I think it is, let's just check that, yeah, 165.50. And the market bouncing overnight though, as can be seen there, and making our way back up to the 50 EMA at the moment. In the pound, still stuck in this sideways range, as can be seen here. Got that range there, and moving back to the upside at the moment on the overnight as the dollar comes under a bit of pressure. Yesterday the dollar was down. The dollar was up yesterday, and the pound therefore moved to the downside, which you can see there. But overnight, starting to move up again as the dollar is moving back. So let's have a look at that now. So in the US dollar, yesterday we had a bit of a bounce. No surprise really, because we are at that sort of 78, 89 level. However, the market's bumped into the 20 bar moving average, and on the previous occasions the market's done this, it's moved lower thereafter. So let's see what the impact of the rising dollar had on the metals prices yesterday. Kicking off with silver, I'm amazed. It certainly moved lower yesterday, but they managed to bring it back. Very surprised by this, as you can see. Big sell-off towards lunchtime. Market finding support at 24.50 before being hammered back again 62% before being allowed to move to the upside. Needs to stay above the DP during today, and also needs to stay above the $25 an ounce level as well. Did very well to do this, because normally if you get a down day like that, they used to take advantage and absolutely monkey hammer. But of course things are slightly different now with what's going on in the world, so maybe the sentiment's changing at last. In the gold market, we're below the $2,000 per ounce level at the moment, stuck in a sideways range. See that more in the 30-minute chart. This is the $2,000 line, and you can understand why the central banks are still buying gold, and they want to use the paper market in order to drop the spot of the physical. Obviously it still has premiums, but not when you're buying several tons. So the gold market struggling with that $2,000 an ounce level. So if you are ever on the long side in gold, you want to watch that level. It needs to break through and hold it. And finally, in the gold-silver ratio, as I said yesterday, you can see the impact of the silver decline there. It's always more aggressive than it is in gold, and that's always reflected in the gold-silver ratio, where you can see prices moving back to the upside there, but overnight not doing a lot, just sideways there. Okay, so today is no economic news after the 2 at 1:30, and it depends how the market interprets that. The bigger concern, I suppose, is going to be the regional banks, whether that starts to gain any momentum again. We'll just have to wait and see and keep an eye on that one. Okay, that will do it for this one. And all things being equal, I'll see you in tomorrow's. And as ever, thanks for watching. See you in the next one.